Michael, thanks so much for your time. I mean, I understand some 140, 150 companies are set to report from the US this week, so certainly one of their busiest. Which ones are you going to be looking out for?
Yes, there might be 150 reporting, but there's only a handful that actually matter. So as you're saying today, we've got the likes of Twitter. There's also we've got eBay later today and Coca-Cola. So those ones are big ones for today. Tomorrow we've got tech heavyweights in the form of Microsoft, Visa, and Facebook. And then also there's Elon Musk's Tesla tomorrow. So that's also a very exciting one. And then I think the most exciting for the week is Amazon on Thursday. How are they doing globally? And are they on path to be the biggest company in the world again?
Yeah, for sure. I mean, I know that there was quite a lot of comfort in knowing that Jeff Bezos would retain the controlling share of that company following his very unfortunate divorce. But in terms of Amazon and it perhaps retaining its position of being the world's biggest company there, I mean, what could potentially have stood in its way?
Yeah, so the big thing that investors are looking at, particularly for Amazon, is how much profit did they make and how much of that profit did they reinvest into growing the business. And traditionally, Jeff Bezos' style has been all the profit they make, they reinvest in the business to grow and get bigger. So that will be a key focus. There's reports now that they're closing some of their Chinese operations. So what are management's forecasts around that? And then the most important is, are they still growing globally? How is their cloud computing business doing? Amazon trades on a very lofty valuation, and that's you have to maintain high growth rates to maintain that valuation. So expect volatility from the Amazon share price just because of how high those expectations are.
And how about Facebook? I mean, Facebook hasn't had the best of times. I think if I can say, and please correct me there if I'm wrong, since the US President Donald Trump was elected, it's been quite a volatile time for Facebook and its business model and questions around ethics and governance and the like and the like. But how is that likely to have impacted on this quarter's results, or is that behind them?
Yes, there's been a lot of negative hype around Facebook, particularly as we enter election season. I mean, next year is elections in the US, but you're already seeing candidates putting their hand up now. You move over to Europe, you've got the EU elections happening there at the moment. So Facebook very much in the spotlight, but actually these elections are good for them. Both Donald Trump's campaign, as you mentioned, was very good for Facebook. It demonstrated that a presidential election can be won by spending on ad content on social media. So expect a big ramp up in social media spend as we go forward. And particular concern for investors will be, what does the company say they're doing with regards to adhering to regulations? There's a number of companies, particularly Australia and the EU, who have now implemented legislation saying that if videos like the New Zealand attack aren't removed within a set time frame, you can get fines of up to 4% of revenue. Now, for companies like Facebook, that's huge. So what are they doing to protect shareholders from this new legislation? That's what we'll be looking at.
Yeah, and I know that Facebook recently came out with some invention regarding its Instagram portfolio. I'm interested in your take on that, and also, I mean, if you'll be taking a closer look at, you know, how many WhatsApp users it's managed to increase or not.
Yeah, so I think the key for Facebook at the moment is how they're monetizing Instagram. There's definitely been a shift from time spent on Facebook, the main platform, to time spent on Instagram. Recently, Instagram's introduced shopping on Instagram, and that's just to make it simpler to buy things. So you see a nice picture, Instagram already has your credit card details, you hit buy, and Facebook gets a share of that transaction. And Amazon has shown that the easier you make things for buying for consumers, the more consumers buy. So this is a very big step forward for Instagram. And again, it'll be interesting to see what they say, what early traction looks like, and what their projections are for that new model.
Mm-hmm. And then, I mean, Coca-Cola, so quite a lot happening with them. I mean, they ventured into the coffee space this past year. I'm hearing talks about them experimenting with cannabis-flavored soft drinks or Coke. I don't know how that will venture out. But for Coke, what will you be looking for, and what are your expectations there? Especially as, you know, people are trying to get healthier, but in their business model, them, again, shielding themselves from the fact that people wanting to consume less sugar by coming out with innovative drinks on that part.
Yeah, so Coke's had a very big push towards actually bottled water. So you sell bottled water for the same price as you sell a Coca-Cola. The one obviously has syrup in, the other one doesn't. And funny enough, Coke makes more money out of selling water because there's less ingredients in it. So what you'll be looking at now is what sort of drop-off have you had in terms of fizzy cool drinks. There's been a decline over the last couple of years. Has that bottomed out? Is that continuing? And then on the other side is how their alternative products like water, like your iced teas, or even cannabis drinks, how are those things doing to compensate? The main thing that shareholders are looking for from Coke is strong cash generation, and that helps with innovation going forward, but also very importantly with their strong dividend.
All right, Michael, I mean, two last stocks I want to touch on, Tesla and Boeing. So Tesla, a lot of the traditional car makers themselves are making inroads into the electric car vehicle and making cars smarter and the like. I mean, with Tesla, what are we looking out for here? And I'm hoping it's not a tweet that gets Musk into trouble.
Yes, the main thing with Tesla is what does their cash burn look like? Musk was on record a few months ago saying that Tesla was weeks away from actually running out of cash not so long ago. What does their cash situation look like now with their ramp up of the factory, the Gigafactory in the US, and now shipping to China and to Europe? How has that impacted their cash flow? There are big expectations from shareholders that this is going to improve and that's going to be better for them. But the big thing is also what do their shipment numbers look like? And it's worth noting that only about 2% of car sales globally are electric cars. So even though you've got competition from rivals selling electric cars, the market is still growing quicker than Tesla can supply. So it's not a problem. And I think the more cars that go into, or more companies that go into electric car manufacturing, the better it is for everyone, because in infrastructure around charging on the highways or charging around the city, that infrastructure is built. So it's not a bad thing for Tesla at this stage.
Right, and then finally, Boeing. Very unfortunate start to the year that they have had with, I understand, the bulk of their 737 MAX 8 still being grounded. Donald Trump offering some sober advice a couple of weeks ago, saying perhaps that they should rebrand. But how much of the grounding of the MAX 737 are likely to filter into these first quarter results? And I mean, the share price has been so knocked. One has to ask if this is also the opportune time to buy a heavyweight counter like Boeing.
Yeah, I mean, I stand under correction, but I think somewhere between 1/3 and half of Boeing's profits were from that 737 plane. So the fact that it's grounded is not good news. The company's already come out saying that they are reforecasting their production for that 737. Yes, the big highlights will be on what is the company's forecast going forward, but then also how much have they had to spend over the last couple of months just to deal with the fallout and change technology, and then obviously upgrade the existing fleet so that they can get off the ground. So very big knock for Boeing. And look, maybe this is the time to buy in. And if you go back and you have a look at things like VW and BP, if you had bought it when the scandal was at its worst, you would have been handsomely in the profit now. And I think the thing is with airlines, you don't want to own the airlines themselves, but the guys who supply the aircraft, it's quite an attractive place to be, given the increase in air travel globally, and that doesn't look like it's going to be slowing down.
Yeah, but also never mind the number of increases in litigation that Boeing faces from the families that unfortunately lost their loved ones. But Michael, thanks for giving us the lowdown on exactly what to be looking out for in the U.S. corporate earnings front. That was Michael Traherne, a portfolio manager at Vestact.